Scott, Happy New Year. It's great to have you on the show to help us start the week and the year. Let's begin with the jobless claims, again, continuing to point to a tight labor market here in the U.S.
Yeah, no doubt about it. The trend is continuing here. Good number, kind of status quo here. Everything seems to be right in line, and now it's, next man up, which means everyone's going to be focused on Fed minutes coming out later today.
Yeah, I think the Fed minutes actually, they look like they were scheduled today, but I saw that they're scheduled for tomorrow as well.
Okay.
And so we saw some conflict this morning, but I think that we figured out it is tomorrow. But Scott, let's talk about the U.S. dollar, which has been coming off a little bit. Let's begin with one of the big influences throughout the month of December to some of the weakness we saw in the dollar was the British pound. I'm curious, have you heard anything in terms of the latest? It looks like they've pulled back off a 20-month high.
Yeah, actually, since I think, like you said, about a year and a half ago or so, right around that 133 level or so. And listen, the Brexit story that kind of was front and center all of 2019 isn't going away just because everybody expects Brexit, to happen sooner rather than later here. So there's still going to be some question. There's still going to be some pressure. But yeah, we're seeing a little bit off its lows, but that 133 level, that coupled with, some of the dollar softness here, pound looks pretty bullish.
Sure does. Scott, let's talk a little bit about what you wouldn't expect to see the Swiss franc rallying with the indices into new all-time highs. Oftentimes we think of this currency as one of the safe haven currencies like the yen or gold. But with the dollar coming off, the Swiss has been well bid to say the least. Talk to us about what you've been seeing there.
Yeah, I was just going to make that exact point. With some of the risk on, risk off types of trades you see the Swiss dollar rallying, you see the Aussie dollar rallying, and those are typically, not in line with when you see gold rally also. So I think it's all focused on what we've seen, some of the weakness in the dollar. I don't think that's going to continue. The dollar is off its highs, obviously. It's settling in here just above that 96 level, 96.30 or so. So I think you may see it moderate a little bit, and some of the rally that we've seen in the Aussie dollar and the Swiss franc actually come off a little bit.
Yeah, you mentioned some of the optimism associated with trade or Brexit negotiations throughout the month of December and how that's come off a little bit, but the optimism associated with U.S.-China trade negotiations has helped lift a couple of the currencies as well. We've seen the 6A, which you just commented on, the Aussie dollar and the New Zealand dollar. That, Scott, really caught my eye. I'm curious if you noticed last week or a week or so ago, they breached a key trend line that they had been on to the downside. I mean, when you've got the 6A, the 6N, the 6C, we talked about the British pound, all of these currencies rallying again, you'd expect to see some weakness in the dollar, but we've got to look at the 6N here, and they're showing some strength recently.
Yeah, I think it's all because of the optimism coming out of China. Not only the U.S.-China tariff news and the potential signing on January 15th, but then overnight you get news coming out of China about what they're doing with the central bank and, some of the economic numbers that have come out over the last week or so out of China as well, much stronger than people had expected. So, maybe there's this little shift there. I'm a little cautious, to be quite honest with you.
Yeah, Scott, let's talk about the Canadian dollar because it's joining in as well to a new high for the year. And again, it coincides with the bid that we've been seeing in crude. It seems like those two products are a little bit more in line. Oftentimes, you see them very closely correlated, but throughout the year of 2019, not as much so. Maybe they're going to start to fall back in line here, but certainly bid in the Canadian dollar as well.
Absolutely. Again, some of the dollar weakness that we've seen, and that pairing, the U.S.-Canada or Canadian dollar pairing, is really it's at its low point since I think October of 2018 or so. So maybe some of it's with the rally in crude. I think most of it is because of the dollar weakness.
All right. So Scott, ultimately, what does all this mean in terms of dollar strength that we had been seeing throughout multi-years? It kind of capped out around 2019, up around that 99.33 level. We've seen some lower highs, some lower lows coming into play, but we're still holding up above a key low here. We're talking about the low that we saw back in the end of June around the 95.50 level. What are you going to be watching in the first couple weeks of the dollar?
Listen, I think 96 is a psychological number. Any of those big, whole, round numbers, 96 is. But like you said, Ben, 95.5, 95.55 or so is really significant support. I don't think we get down there to hit it. I think what we're seeing is just maybe the uber momentum that we saw throughout 2019 that helped this dollar's strength is coming off a little bit because of the optimism over the U.S.-China, because of the optimism coming out of China with some of those economic numbers. But I don't see the dollar falling much from here.